It's 10 a.m. in Lagos, Nigeria. That's time for current and relevant business conversations, and it happens on Business Morning here on Channels Television. You're welcome. I'm Ini John Mekwa. Well, as usual, we'll start with what's going on with oil prices. It clawed back some losses after tumbling more than 5% to a 3-week low in the previous session after consuming nations announced a huge release of oil from emergency reserves to offset supply lost from Russia. Brent crude futures climb $1.32 to $102.39 a barrel, while U.S. West Texas Intermediate crude futures rose $1.18 to $97.41 a barrel. International Energy Agency member countries have agreed to release 60 million barrels on top of a 180 million barrels release announced by the United States last week. And that's to help drive down prices in a tight market following Russia's invasion of Ukraine. Analysts say even with the emergency oil stocks release, supply still remains tight. And talking about the International Energy Agency, it plans to release 120 million barrels of oil in a bid to ease global energy prices. The United States will deploy 60 million barrels of oil, while the rest will come from other IEA member countries. The U.S. contribution is part of the 180 million barrels that President Joe Biden has already announced. The coordinated action by major energy consumers is intended to soften the economic fallout from a surge in energy prices since the invasion of Ukraine. Economic sanctions and unofficial buyers' strike have curtailed Russian oil exports, resulting in the biggest energy supply disruption in decades. Meanwhile, oil prices fell following the IEA's announcement of the big release from reserves. Coming to Nigeria now, Zenith Bank gross earnings of 765.56 billion naira seems to be a confidence boost for the board, which believes the figures attest to the bank's resilience. The financial institution's performance in 2021 was reviewed at its first annual general meeting in Lagos. It was attended by management and staff, as well as shareholders of the bank.
Shall we be seated?
Board members, directors and shareholders of Zenith Bank PLC meet to receive and evaluate the bank's annual reports and financial statements for the year 2021.
Now, business of the day.
The proceedings highlight presentation of reports on the audited accounts from independent auditors, external consultants and audit committees of the bank.
The scope and planning of the audit were adequate in our opinion.
Figures from the review period indicate significant improvement across key indices. The group's gross earnings grew by 9.92% from 696.45 billion naira in 2020 to 765.56 billion naira in 2021. Profit after tax rose by 6.07% from 230.57 billion naira to 244.56 billion naira.
In the midst of pandemic and economic challenges, we are able to grow our gross earnings.
Shareholders commend the board for its work, but they also seek to understand the bank's decision to invest in areas like cybersecurity.
We are at the forefront of driving digital awareness and illiteracy, because when you talk about cybercrime, it is a people thing. Either a people thing where you have a collusion, or you have a negligence where people don't know what to do.
On the sidelines of the meeting, the Group Managing Director gives further details on growth capabilities.
When we started retail in 2018, number of accounts in the industry were like number 8. But as at the close of last year, Zenith is a very close number 3 in terms of number of accounts open. So you can see that the trend is continuing, and we are going to continue to double down and accelerate our digital campaign.
Shareholders are pleased about the dividend payout of 3 naira 10 kobo for the 2021 financial year.
As we were at the meeting, I got an alert payment of the dividend. This is very commendable.
Zenith Bank says it remains resolute to seek more growth opportunities while maintaining its overall goal of creating enduring value for all stakeholders.
And that's a signal that we're going to the commodities market. And we have Bolanle Agbaje, analyst with Financial Derivatives Company, joining us for the second time this week. Good morning, Bolanle.
Hi,
good to have you again.
Thanks for having me.
Yeah, so we talked about oil, and then we saw that, that we have releases coming from IEA countries, the US, and that's maybe temporarily we'll have...
Yes, the fact that they've tried, with OPEC, and OPEC hasn't, done as much as what the U.S. wants them to do. So it makes sense to rely on, the IEA and obviously the U.S. stock reserves. In the meantime, I'm not so confident that the added supply would actually make oil price, decline to below $100. We're confident that...
But we have the WTI is 96 or so.
Yes, so our own benchmark is usually the Brent crude, and, that's what we follow. And for Nigeria, it's more or less the price that we do or that affects us. And, $100 per barrel is not, it seems reasonable, at least in the short term. I don't think the supply added would have any significant, impact.
That's sad, in spite of all the efforts, 60 million, 120 million and all that.
Yes, like I mentioned, Saudi had already even increased prices, and, they've weighed options and looked at the fundamentals within the market, and it makes sense, for them to, raise prices and still, get the demand that they require.
Yeah, because demand is out there now, supply is really low.
Exactly.
But let's talk about gas. Nigeria is asking the NLNG to increase its output. First, what is their capacity? Can they do better than
So their capacity is usually about 22 million tons a year. Right now, they're only producing about 70% of that, which is not necessarily great. I had mentioned on Tuesday about the fact that, some of these EU countries are looking for other countries to actually buy from.
Yes.
And, Nigeria is usually one of the countries that should have been considered. Algeria is one of them. But the fact that, so we had always looked for what exactly was the issue. We obviously knew the pipeline, the cost and all of that, but hearing that this JV agreement with Shell, NNPC and some other corporations, as well as Nigerian LNG, they've mentioned the fact that they don't want to allow third-party operators, pass, gas through their pipelines, which is ridiculous at the moment, because at the end of the day, it benefits the whole country if we're able to, supply and keep exporting, at least maintain the market share within the, the.
And I'm sure, I mean, it's not for free. It's all business.
It's all business, but I think that their main concern, especially, some of these partners, they mentioned the fact that, they would only allow some of these third parties if they're passing gas at a subsidized rate. And, for some of them, the cost environment is relatively very high at the moment. So it doesn't make sense for them to, reduce their cost at the moment to pass, gas.
Operation cost is high.
It's very, very,
but
very
why
high.
are they still at 70%? I mean, there's the demand. In fact, I think for this year, was it this year, last year, all their supply had to be channeled to domestic, domestic demand.
We've had the issue of gas flaring, the fact that, there was the focus was always on oil. So, this gas has always been secondary when it comes to the Nigerian
So it doesn't
economy.
have investment.
It doesn't have as much investments. The fact that we're still relying on the same, pipelines. We haven't increased the number of pipelines that we have. I know for LNG, they have about 6 trains at the moment, a 6-train complex. They're looking to invest in another one to make it a 7-train. It's highly, cost intensive. So it's not as easy as one would think. And considering the fact that, this hike in gas prices has been there, yes, but the focus had always been on oil because it generates better revenue, and we obviously had our trading partners. But right now, it's a loophole in the market, in the world economy. So it's left for Nigeria to actually market, territory when it comes to relationship with some of these EU countries.
And I know that NNPC Limited has been talking about pipelines for gas.
Yes.
In fact, the matter came up in the House of Representatives. I think it was last week, and they are probing, and we have so much money. We have I think we have like 3 major pipeline projects that seem at the moment we just have some money pumped into it and we don't see what's going on.
Like I mentioned, Nigeria, we have a problem with actually going through with, some of the plans that we have, especially the cost-intensive ones, just because you don't reap the benefits of it until, the project is finally, finished. So it's less incentive for them to, keep going on with certain projects when you have, some of these other commodities that are actually booming. So I think that's the major problem. But if there's, I think also the lack of discipline within the Nigerian, economy and the Nigerian government. If there's actual discipline within that space and they actually focus on, some of these projects that they have and not caring about whether they actually see the short-term benefits of this and focus on the longer term, it would actually make the country better, I think.
Yeah, but, when you talk of gas also, apart from for foreign exchange and all that, I think it's being underused in Nigeria, because I learned gas can be used for power, it can be used for fertilizer, it can be used for a whole lot of things, but we're not exploring and we're wasting the gas.
Yes, because the gas that we actually produce is in its natural form. Yeah. To use it for some of these, other channels that you've actually mentioned, it requires a lot of technology, and that has to, change or convert this gas to what it's supposed to be used for. Like I mentioned, that requires heavily capital intensive, and it's not something that most people, they would rather rely on the project on the existing technology that we have at the moment. So that's usually the major challenge, and it's not even
we're looking
profitable.
For how we can send the raw materials and get the finished product.
Yes, and it's not even profitable for some of these private investors, because I'm sure you've had a lot of private investors that would actually like to partner with the government and make investments in this space, but the environment is just not. Investors are not safe in this kind of environment.
Yeah, so. And I remember you mentioned that on Tuesday when I asked about why can't we attract foreign investment for the pipeline, and you asked, when there's no assurance of security.
Yes. So,
the political scene also is a factor at this time.
Yes.
We have a major election coming up,
and some of them, this is not just the right time to actually bring your money in for some of them as they think. And, right now, you see the dollar goes up and down. Some of them are not sure what they would be taking back home. Would their money decrease in value? Would it increase in value? So all of those uncertainties would prevent, some of these investors from coming into the market.
So it looks like for now we just have to keep talking, and
we have to keep talking.
For a new administration.
Yes,
doesn't look like major.
Be hopeful that the new administration actually follows on with, some of these plans, because I think the change in administration always creates a shock in the economy, because a new administration obviously has new plans, has different ideas,
different vision,
exactly,
approach.
And it usually there's also a lag. It takes some time before they adjust to what they actually want to do within the economy. So all that usually affects.
And sometimes I think what we've also noticed is when politicians are about to take power, they make a lot of promises, and they're not in touch with the reality. And so when they get in there,
they're all kind of overwhelmed.
Yes, exactly. By the time
that could be a factor. Yes, that could be a factor as well. But also, when you're looking at the Nigerian government, the different arms, there has to be collaboration between the different arms, and I don't think there is at the moment.
Yeah, we've talked about interagency rivalry in so many areas. Well, moving from that, we have Afreximbank setting up a $4 billion trade fund.
Yes, so it's actually in response to this Russian-Ukraine trade war, and it's kind of, there to help many companies and countries, African countries, to cope, when it comes to imports and exports. I think they mentioned that they had actually received requests of about $15 billion, but this $4 billion is not even scratching the surface. But at the same time, they're committed to helping, the African economy to
So how would this work? A company or a country?
So I think they would lend to both companies and countries within the space, and obviously consider projects that, are focused on the import and export of commodities within the African space, because we're heavily, commodity abundant, and, we're not really tapping into it and taking advantage of this, situation or this divide within the Western world.
Somewhere in my mind, I just wonder why African countries can come together,
and
and use the comparative advantage policy or principle, or you have this advantage, you focus on this, channel all your resources, or at least majority of your resources on this, you did this, and then at the end of the day, we exchange, and I think the continent would just have things easy.
Well, research actually shows that it actually depends, or it's as a result of how, each of these African countries were actually colonized. Some were, resource dependent, and, you had some extractive institutions in those, countries, and also in other African countries, you had growth enhancing institutions. So that history actually created, that shake within, some of these African countries. Like, for example, Botswana, you don't hear of Botswana complaining about corruption within their diamond industry. They actually had growth-enhancing institutions within the market, within the economy. And, well, with Nigeria, it's mentioned that, we had, extractive institutions, just because Nigeria, at the time when colonizers came, they didn't have, it wasn't a favorable environment for some of these colonizers to actually settle in. So they took and left. But it's a story for another day. But that's usually the history of.
But that's the foundation of some of the things that we see.
Yes.
Also, following the war going on in Ukraine, global trade is down 2.8%.
Yes, so like expected, a lot of companies refuse to, trade with Russia at the moment. However, the EU is a particular one in the sense that some countries have, opposed trading with Russia, but countries as big as Germany within the EU has actually come out to mention that, they're not actually going to stop, this trade with Russia.
That's the energy one.
Yes.
Because they don't have...
They're heavily dependent, and they don't have any alternatives at the moment. And I think they had only settled with the fact that they would focus on coal, which is actually, going to be done in phases. So coal is less vulnerable. They will stop, trading coal with Russia. And also, Russia had mentioned that they only want their currency, the rubles, to be traded with them. I think Hungary had accepted that they would do that.
Yes,
so
you're one European country has accepted that.
Hungary. So they're
even paying the bonds now with rubles.
So it's a divide within, some of these countries. But I think the general idea there is to reduce, trade with Russia, just to make sure that, they feel it, and they kind of reduce what they're doing to Ukraine.
Yeah, so I just wonder, I pray that the war ends soon, and I wonder if countries will go back to status quo after the war, or they will just keep at, want to cut off with Russia.
Yeah, I think the war would actually create some long-lasting, negative effects. The world that we know it now would actually change. Trade, globalization in itself is going to definitely change, and it's just what it is when it comes to, what's happening.
All right, what else is going on in the commodity space?
Yeah, well, in the commodity space, we're seeing mixture of fluctuations in the price of some of these commodities. I think the price of gari and tomatoes have increased slightly, but we're still seeing consumer resistance. But nonetheless, we do expect that commodity prices will actually inch up now that we're entering, or fully entering, the planting season. Yes.
All right, Bolonle Agbaje, thank you so much for sharing your thoughts with us this morning.
Thank you for having me. Thank you for
the rest of your day. All right, so from the commodity space, of course, we do have other conversations coming up, but that will be after the break. This is Business Morning on Channels Television.
Insurance, as you well know, acts as a catalyst to nation building. Insurance acts especially on the non-intangible and the intangible. They act as a kind of a restoration. So that's what we call the general insurance. Under the general insurance, it talks about indemnifying you to the position you were before, immediately before the occurrence of any hazard. And the insurance of a person deals with benefits, and that is the side that concerns mostly the Nigerian Social Insurance Trust Fund. In 1961, when the then National Provident Fund was brought into being, it was mainly designed for the private sector. So that orientation has continued over the years until great new ideas to reform, to improve on the existing scheme came up, And that came out through Decree 73 of 1993. And that decree was what brought what we now know as Nigerian Social Insurance Trust Fund. And because of that orientation that it was mainly private sector, so today as we speak, private sector still leads. In fact, they lead well over 70% of the total contribution, more or less known as premium contribution to the scheme, as we have it today. But I know that the government are trying to fight to catch up. So the onus is on the institution to do a lot more, to bring all the public sectors, beginning with the federal, the state, and the 774 local governments we have in this country into the fold of this employee compensation scheme. NSITF is a non-treasury funded organization. And the funds we call that is described here is actually a 1% contribution coming from employers of labor to procure a cover, an insurance cover for employee. So it's not really a revenue. It is better described as a premium that is paid to procure a cover which ranges from total disability, permanent disability in case of accident, or medical claims or medical benefits that arises in the course of your working time. Otherwise, if a death occurs, the mode of paying all this compensation are contained in the Employee Compensation Act 2010, very clearly. So, because it's a non-treasury organization, parastatals of the federal government, that contribution in itself is not described as revenue. It is not. It's not revenue. Because the duty of NSITF is actually to translate their vision into reality of poverty alleviation, of income insecurity, and reduction in unemployment. So if these contributions are brought in, the only thing why the funds comes in before claims occur, a smart financial expert, which I am one anyway, is that those funds cannot be lie idle. Those funds have to be invested in line with the provision of the Act, both Act, NSITF Act, and the Employees Compensation Act. Income coming from that, maybe that aspect could be looked at, but that there are surpluses to which the institution, NSITF, have failed to remit, I am not too clear about that because I have not found that in the law.
Now, that was the chairman of the Nigeria Social Insurance Trust Fund, Mr. Austin Inaje-Moisire, who visited the headquarters of Channels Media Group yesterday. The Nigeria Social Insurance Trust Fund is a proactive and employee-dedicated government institution committed to the welfare of employees in both the public and the private sectors. Well, moving on to other conversations now. Finally, it's April, and that's the deadline for the recapitalization of microfinance banks. The deadline was extended because of the pandemic. A minimum capital base for national microfinance banks should now be 2 billion naira. State microfinance banks have 100 million, while the unit microfinance banks have a minimum capital requirement of 20 million. Well, we had this conversation some months ago on the deadline, and we're following up on that with the president of the National Association of Microfinance Bank, Mr. Yusuf Ahmed, joining us from our Abuja studio. Good morning, Mr. Ahmed.
Yeah, good morning, and thank you for having me again.
Good to have you again. So how far have you gone? The deadline is here.
Well, the deadline is quite okay, and we've gone far. However, the level of compliance is not that encouraging. As I'm talking to you now, we have barely about 180 banks out of the 887 that have crossed, that threshold. Meaning, if CBN, as they keep insisting, go ahead with this, it means about 600 banks are going to go down. And that will be very, very disastrous to the financial system in the country.
So I know you've been in conversation with the CBN regulator and all other related arms. What has been the outcome? Is there a possibility of an extension or assistance, intervention in any way?
Well, frankly speaking, we've been talking, we've been advocating with all the agencies that are concerned. But the major one is the central bank, who is the regulator, actually who came out with the policy. They are insisting that they are not shifting grounds, but we will not relent in our efforts. We continue to advocate. We believe there is no challenge that advocacy cannot resolve. So we will continue to talk. Yes, April is here, and we are hoping that something, a miracle will happen, and I think it will reduce the level of collapse in the system. So we are hoping that other agencies will come to our aid. But to answer you directly, there is no intervention of any sort. We are not expecting any intervention. There has never been any intervention for the microfinance banks. These monies they're asking us to inject into the system are coming from private purses. Nothing coming from the government, no support of any nature. So and it's a Herculean task, but we will continue to struggle. Definitely, no matter what extension we're giving, some banks are definitely going to go down, but we will continue to do what we can do, and we are still encouraging our members to do whatever they can. Let them continue to inject, little by little until we get there. But April is here, and like I just shown out the figures, about 600 and something banks are going to go down. That will be terribly, terribly bad for the system.
Talked about the issue. Even the CBN also said, what about mergers and acquisition for this 600? I mean, even if the 600 merged to a smaller number.
You see, people keep talking about theory. That's just theory, okay? Now, this number that I've given you, the 187 that have crossed, the bar, all these options of mergers, acquisitions, reinjecting additional capital, straight buyouts, acquisitions and things like that, they came to play before we even arrived at that 187. So it's not as if we're just looking at injection fresh capital only. We've combined all the options, and that's how we're able to attain the 187, number level. So we will continue, like I've said, we'll continue to explore, but the best option for the system is to inject, fresh capital, because that will give us additional funds to do our, services to our customers. But like I've said, there is no intervention coming from anywhere. We are not expecting any funds from any agency. So we are working on our own. Individual banks are struggling to get private funds to see that they meet this, deadline.
Okay. What would you like to see? What do you think should be the ideal at this time? We know the place of microfinance, to help in, especially MSMEs, accessibility of funds and financial inclusion at the lower cadre of the society or the economy. So what would you like to see? What do you think can be of help to the microfinance at this time?
Like we keep saying, we have written severally to central bank. Yes, there is wisdom in increasing the minimum share capital, but not by the 1,000%, level they're asking us to do. That is one. Two, central bank is just looking at the number of the microfinance banks only. They are not considering the over 16 million customers that we are serving. Our concern as an association and as practitioners is not just for the banks only, but also for the customers that are relying on us. Most of these customers, when they go to conventional banks to ask for loans, they don't get it because the conditions they're given, they can't attend. So the easiest and simplest place for them to obtain loans and advances is the microfinance banks. Now, if you take out of 800 banks, over 600 out, then what are the banks that will be remaining to service these microfinance banks? And this 187, now we have about collectively about 1.4 trillion total assets that we are controlling in the microfinance space. Now we know a very good percentage of that is controlled by the few national microfinance banks. Now when you are talking of deepening financial inclusion, when you are talking of deepening outreach to customers, you look at the other classes of the microfinance banks. That's the unit microfinance banks and then the state microfinance banks. The national, yes, they are doing well, but how many are they? They are only 10, and they are only 9 right now. So we are talking about out of 800 and something, only 9 are national, and they're controlling the bigger size of the market. But deepening inclusion, financial inclusion, and reaching out to the customers is done by the by the unit, microfinance banks and the states who are closest to the grassroots. So if you get all these ones, and mark you, this collapse is going to affect majorly the units. Those are the ones that are scattered all over the country. They are the ones that are going to go out of business. So we have said that to central bank. We have proposed, yes, let's go ahead with the recapitalization. Let's inject some additional funds, but not the 1,000%. We are saying for the 2 tiers of the unit, that's the rural unit, which was 20 million and was raised to 50 million. We say, look, make this one 35 million. Most of our banks from 20, they will be able to make that 35. And then for the urban, that is the urban unit, from 20 million to 200 million. That is a tall order. We said, yes, let's take it from that 20 million to 100 million. We believe, and these 2 classes are they're like 80% of the whole banks. And then for the states, which hitherto was 100 million, it was now hiked to 1 billion. We say bring that one down to 500 million. So for a bank in a particular state that wants to operate within the state, some of the local governments in the state, I think 500 million will be okay for them at micro level. It's micro lending we're doing, not big ticket lendings. And then for the national, what you find that most of the nationals, they have foreign backing. And so injecting additional capital might not be a major problem for them. But however, they are our members, and we believe 5 billion, from 2 billion to 5 billion, we think is very, very high. So we are saying for that 5 billion, let it just be 3 billion. At least let's do this for now. Let's watch out and see, is there going to be any impact with what we are proposing? If there is no impact, nothing says the central bank cannot reconsider and then, do additional, increase in the minimum share capital. But at a go, to do 1,000% increase, I think it's not realizable at all. And it is going to affect the financial system negatively. And don't forget, these 187 that have just, we are telling you that have crossed the bar, once they are there, by the time the 600 go down and they are closed, there is going to be serious effect on this existing one, the surviving ones. Most of them will have run. Customers will run, from them. And then before you know it, some of them also, will naturally also go down. So let's look at the wider picture. Let's look at the effect, not on the banks only, not on the banks, on the customers, on the staff. Right now, we have over 74,000, workforce in microfinance bank. By the time over 600 banks, go down, how many are going to remain? Let's look at the employment also. So this is what we are proposing. We have written this and we are proposing CBN, but they are regulators. They are saying they are not shifting grounds. And as practitioners, as good corporate citizens, we will follow, tag along with them. But at the end of the day, it should be known that we have already sent this word of caution, that these are the likely negative consequences that the system is going to, experience.
All right, Mr. Ahmed, we certainly know that the CBN hears you, and with the letters you have sent to them, perhaps there might be a compromise just before the end of the month. We wish you the best in this quest of recapitalization. Mr. Yusuf Ahmed is the president of the National Association of Microfinance Banks, and it's deadline time for microfinance banks, and we'll see what happens by the end of the month. Let's do an opening call to the market now. We have Anit here giving us a report of how the market closed yesterday. Unfortunately, it was a very short-lived, bullish return in the markets, in the equities?
Yes, good morning, Ini. Midweek trading at the NGX, of course, the market went back into the red, and that's because of sell pressure from 18 stocks, in particular the shares of GTCO, as well as NGX Group, Zenith Bank, Owando International Breweries, and Nigerian Breweries. So, but of course, the what we gained on Tuesday was more than 48 billion naira, and then what we lost due to the sell pressure was just about 6.04 billion naira. So this is what it translates to when you look at the all-share index, just a mild 0.02% drop, and then, like I mentioned, 6.04 billion naira loss in market value. So, but of course, it's not all about that. The market is in the red, because month to date, when you look at from April down to Friday, April, starting the first day we started April, and at the close of Wednesday's trading session, what we had in terms of month-to-date return is unchanged at 0.4%, while year-to-date, what we have is a plus 9.5%. So this is what the sectoral performance look like. It's still green, and then, of course, in terms of activity, it's still in the green. So, but to tell us more about the market, let's talk to Abdul Rashid Momo, who is the head of capital market at TRW Stockbrokers. Thank you for joining us, Abdul Rashid.
Good morning.
Okay, now the market, I think on Tuesday, close of midweek trading session, Unilever posted after 2 consecutive years of decline, it recorded positive growth, and then of course the numbers were quite impressive. But I don't know at the moment, how are investors reacting to the positive numbers from this consumer goods giants?
Okay, my analysis are normally based on charts, right? What I'll say is that Unilever has been trending within the 13 naira range for a very long time. And when the stock consolidates within this period for such a long time, there's bound to be a breakout. So for now, I think we've been seeing more of accumulation into those shares for a long time. With this results coming out, it will only take time for it to actually spike out of that range. And I think that spike is going to be massive in the long term. But for now, we are actually in a flat or slightly bearish market. So we are not really seeing a lot of bullish terms of trends so far. So I think it's more of a waiting game until I think they actually need someone that actually break that price up. But for now, it's more of buying into the dips and waiting for a breakout.
Okay, so but we take a look at some stocks where most likely we've actually been having more of a sell pressure, and then of course we're in the dividend season. But why are investors not keen on buying stocks as we speak?
I've always said one thing: we always have two players in the market. We have the investors and the traders. If you check out most of these stocks, prior to when dividends were actually dividend payouts came in, you see that those stocks that had already, most of these things have already been priced in. Most of those stocks we've seen rallies happening in the first quarter of the year. So when such dividends come in now, you now see prices going down. You see, it has always been a pattern. You need to watch the market. For me, for now, it's a win-win situation in terms of the people that bought low, which are the traders. They sold to the investors. Investors are getting value for what they have. So what's going to be the next is that possibly the traders will be waiting for prices to correct more to the downside. It has always been a trend, it's a cycle. When dividends are announced, you don't see much. We don't see much trends. We don't see more of these markets going up. Because the last time I said when they announced, example, Zenith, I said until Zenith hits about 28 naira before we know that there's actually a clear breakout. Since for the past, since 2018 till date, Zenith has been doing what they call 31, 29, about 27 plus. So until markets break out from those levels, nothing's going to happen for now. This current correction that we're seeing now to the downside, we expect to see some slight more trend to the downside. What I'm saying is that for us to get a good bull rally, corrections are bound to happen. People should not be scared, but corrections are bound to happen. Prices don't go up all the time. There must be downsides and upsides at any point in time.
Okay. So thank you for that analysis, Abdul Rashid. And then, of course, as usual, we keep our eyes on the market. So that was Abdul Rashid Momo, the head of capital market at TRW Stockbrokers. So now we move over to the smaller unlisted securities market. It's still maintaining that uptrend for a third consecutive session. At the close of mid-week trading session, it was up by 0.47%, the same margin for its market cap. But in terms of total value of transactions and the volume, as well as the number of deals, they were down. The fixed income market is still quiet there. We're still expecting the market to make some rebound due to investors' actions. So that's it for the markets.
All right, thank you so much, Anita. Thanks for taking us through the markets. But we'll take a break now. When we come back, we'll do an opening call to London. Do stay with us. This is Business Morning on Channels Television. You're welcome back. Rising energy prices, even before the Russian invasion in Ukraine, has been and is still of utmost concern in various countries. One of them is the United Kingdom, where a new energy strategy is being unveiled. We have Juliana now joining us from our London studio. Well, good morning, Juliana. Is part of the strategy the talk about 8 nuclear reactors?
Good morning, Innie. That's right. As we were discussing yesterday, today, Kwasi Kwarteng, the business secretary, has unveiled the government's new national energy strategy. And really what Downing Street want to do is to take away some of the dependence on gas and energy away from the continent and bring it squarely back into Britain. And this is a strategy that has been devised before the invasion of Ukraine by Russia. And that's because we know that gas and energy prices have spiraled completely out of control, and that's one of the reasons why consumers here in the UK are paying 52% more a year for their bills, and that is likely to rise in October 2022. Some of the significant areas of trying to revive Britain's energy sector will be on drilling for more gas and oil in the North Sea. This is going to involve a procedure called fracking, which is very, very controversial. Lots of campaigners were not happy about fracking, which is basically pumping cement down into the earth, because, of course, it has environmental consequences. And just after COP26, we were talking about the climate emergency and how we're going to tackle it. But I think Boris Johnson and the government now realise that some of these ambitions were perhaps too ambitious in the light of this changing nature of the world. So that is very much a part of this plan, as well as investing more in solar energy and solar panels, educating the British public more to try and put some of these solar panels onto their homes. This was set out as well in the spring statement read by Chancellor Rishi Sunak a couple of weeks ago. VAT on installing solar panels will be reduced from 5% to 0 for 3 years. And then there will be a nuclear plant built every year until 2030. Like I said, before the invasion into Russia, into Ukraine by Russian forces, we were already facing extremely high energy bills. They're not going to come down anytime soon, but this new document sets out a plan over the next few years so that we can avoid the volatile prices on the international market?
Yeah, very elaborate plan there we see, and some admissions coming from Prime Minister. But talking about the Russia invasion into Ukraine, it's going to cost Shell $5 billion to pull out of Russia. And seeing that its headquarters is now in the UK, is this expected to have any impact?
Well, it has definitely had an impact on the blue chip index. It's in the red this morning, and it is led by Shell. Their shares were down about 2%. I believe on their US listing, the shares are down by about 0.9%. And I think that's obviously because of the after effect of Shell being one of the first major oil firms to decide to pull out of the Russian market, which includes shutting down all of their service stations and no longer providing aviation for any Russian planes. I think some economists had projected that this would perhaps cost Shell between $2 and $3 billion. No one was expecting a $5 billion hit, and you know, more is to come. This is just a forecast. We don't exactly have the right numbers. Let's remember as well that Shell also had exposure to Gazprom Neft, which is the Russian state's biggest gas and oil producer. They decided to pull out of their stake there. We're not yet sure how this is going to affect them. And will Shell be back? We know there was some suggestions a couple of weeks ago, especially from Foreign Secretary here, Liz Truss, that perhaps if Russia does decide to step back, some of these sanctions will be lifted. But in the meantime, this is certainly affecting big oil titans like Shell. But, you know, $5 billion loss for pulling out of Russia, but they still got billions upon billions of profits, I believe.
Yeah. Yeah, of course, they still have billions of billions, but the war is certainly costing a whole lot. Thank you so much, Julian. I will talk to you again at 1:30.
Thank you.
Let's head to the crypto space now. It's not yet Friday, but I think yesterday the market was in red. I don't know if it's recovering or not, Laddie.
Right. All markets are rattled, Dini, and the crypto space is not left out. We're seeing the sentiment in the market is back in fear today at 34 points. We're trending around the neutral level for the past 2 days, but now we're back in fear, showing that traders are becoming fearful at this point. Market cap wiped out about $16 billion. That's down about 4% this morning. Volume traded. We're seeing more volume this morning on the back of sell-offs in the market with Bitcoin and major altcoins. Bitcoin dominance there sitting at 41.24%. Price of Bitcoin this morning, $43,508. That's down about 4.27%. We saw Bitcoin lose that 45,000 support mark. We see the bears have been able to push it down to about 43,000. They'll be aiming for that 40K level at this point, but all eyes on the 42,000 level. Volume trade at $36.38 billion. And we see Ethereum there lost the 3,500 support at this point. We're all eyes now on the $3,000 mark. Is down 4.19%. Volume trade at $22.13 billion. So we see no coin is spared in this market. We see BNB down 2.33%. Cardano down a big 7%. Solana down 9%. It's all red, blood on the streets in the crypto space. Let's bring in Bjorn Martins now, CEO Passive Income Token. Great to have you on the show.
Good morning, Larry.
Morning. So, you know, we've seen the war in Ukraine, you know, impact major markets. We're seeing NFTs actually playing into this war with Ukraine, actually selling NFTs and NFTs being donated to Ukraine at this point. But what does this tell us, you know, about the NFT space?
It's amazing to see that we see new technology being used for things like this, helping each other, really bringing in donations that couldn't be happening before. Also, the first time we can track the money, as never been done before with these NFTs, and the blockchain, of course, as it is open. I think it's something very special as well, as they now made the Meta, the Museum of War. It's the first time it's going to be used in war, so I think it's going to be very special, a digital collectible of the war. It's never been seen before as well. So we can see something interesting happening in this part of space.
Quite interesting. And I'm wondering, you know, okay, these NFTs, you know, being sold by Ukraine, you know, showing, you know, the destruction, you know, of the war. And I'm wondering, where do we see, you know, these NFTs, say, in 5 years?
Yeah, good question. It can go all sorts of ways. The war is not finished yet either. So, for example, if Ukraine will be, basically gone from the earth eventually, if Russia will win, they can go very high in prices as it's something that doesn't even exist anymore. But anyhow, it's a collectible. It's a digital collectible. It's something that's not happens often. It's the first NFT-related concept in a war as well. So yeah, we can see some interesting things happening with these values of the NFTs from the war.
Quite interesting, Bjorn. Well, we'll see if maybe I can lay my hands on some of those NFTs at some point. Thank you so much, Bjorn. Thank you as well. Have a good day. Yeah, you too. All right, now looking at the top alts by market cap, we see it's all red. We see Solana lost that $130 price range. Cardano down 7%, Solana down 9%, and XRP has lost the 80 cents mark. It's down 5.05%. So it's back to fear. But I don't know if you want to grab some of those NFTs. They might be worth a lot.
No, I'll just watch
in
you.
The future.
I'll watch you grab yours and see how it goes.
Yeah, I'll try.
All right, Laddie, thank you so much. Well, that's it on the program for today. Thank you so much for being a part of it. Great 55 minutes of great business conversations. We'll do it again tomorrow. But we'll have 1:30. Business Incorporated will be on. We'll give you updates from the world of business. I'm Ini John Mekwa.